Watch out for title loans, the truth about using your car for fast cash. Now hold on a minute. Before you use your car to get fast cash, please watch this video. I'm Samantha Kell, a lawyer with Legal Aid of Northwest Texas, and I've heard too many stories of people who have lost thousands of dollars, and sometimes even their vehicle, because they took out title loans. You've probably seen the ads, get cash in 30 minutes, drive away with money today. What these title loan companies don't tell you in their ads is that these loans could seriously impact your finances. If you own your car and you need money quickly, the next 5 minutes could save you from making a costly mistake. A title loan is when you give a loan company your car title as security, and they give you money in return. You continue to drive your car while making payments off on your loan, and then you get your title back. These companies advertise with phrases like, get cash today and no credit check needed. They make the process sound simple and convenient. But what most people don't understand the true cost of these loans over time. When you get a title loan, you're actually signing two contracts. One contract is with the title loan company, the actual storefront that you walked in. They're the servicer of the loan. They complete the loan documents, file the lien with the Department of Motor Vehicles, and collect payments. The other contract is with the lender, the company, often not even in Texas, that is actually lending you the money. Under these contracts, the servicer charges a fee for every month until the loan is paid back or in full to the lender. Now, here's what most people don't realize about title loans. The monthly payment schedule listed in the contract is not for your loan. It's for the title loan company's service fees. So when you make your monthly payment, you probably aren't paying off your loan. In fact, in most cases, you're simply paying a fee for the title loan company to extend your original loan for another month. Let me explain. If you borrow $1,000, your monthly payments might be just $250. But that $250 typically doesn't reduce your $1,000 debt at all. It just buys you more time before having to pay back the original amount. This means you can make payments for months or even years and still owe the entire $1,000. What's more, the lender doesn't care if you make monthly payments or not. They just want the loan paid in full before the contract ends. And if you pay the loan off early, you wouldn't even have to pay the monthly service fees to the title loan company. I'd like to share a story with you about someone who took out a title loan. An elderly veteran needed $2,000 for an emergency expense. He obtained a title loan, and he faithfully made payments of $300 to $400 every month. After several years, he had paid more than $7,000, more than 2 times his original loan amount. Yet despite all of these payments, he still owed the original $2,000 because all of his payments were going to the title loan company for service fees and not to the lender to pay for the actual loan. This isn't unusual. Many people end up paying several times their original loan amount while the principal balance remains unchanged. You may wonder how companies can legally charge so much. They use a specific business structure and a loophole in the law. Instead of calling these charges interest, they label them as service fees. This approach allows them to work around laws that put a ceiling or a limit on interest rates. When calculated annually, these fees could amount to more than 300% of your original loan. This means for every $100 you borrow, you could pay $300 or more in just 1 year. And missing a payment creates serious risk. The company can repossess your vehicle, often with little warning. Consider what losing your transportation would mean. No reliable way to get to work, difficulty getting to medical appointments, problems picking kids up from school, expensive alternative transportation costs. Even after taking and selling your vehicle, some companies will still require payment from you if the sale didn't cover your remaining loan balance, interest, and service fees. If you need money for an emergency, consider these affordable alternatives. Community assistance programs in your area, faith-based organizations that offer financial help, credit unions that might provide a lower interest rate, payment arrangements with your existing creditors, small loans from trusted friends and family. Or you could call 211 for resources in your community. Even most credit cards have lower costs than title loans. If a title loan truly is your only option, remember that you have to pay back much, much more than the amount listed in the monthly payment schedule, like double that amount, to actually pay off your loan before the contract ends. And if you're unable to do that, you will eventually lose your vehicle. So please be careful. Remember, title loans cost thousands more than the original amount borrowed and put your transportation at risk. Before signing any agreement, make sure that you understand exactly what your payments cover and whether they reduce your principal balance. If you already have a title loan that's straining your finances, we may be able to help. If you want more information about consumer matters, including title loans, or you think that you need help, contact Legal Aid of Northwest Texas at 888-529-5277. We provide free legal help for low-income Texans. Thank you for watching, and please share this information with anyone considering a title loan.